Unemployment queues lengthened in the fourth quarter. 22,000 more people were without jobs during the period when compared to the third quarter. This means that the official unemployment rate increased by 0.2 percentage points to 32.1% in the final 3 months of last year. The jobless rate comes as no surprise to analysts as the economy remains weak and business confidence is depressed, and this undermines job creation. 490 jobs are on the line at Kumba iron ore, and contracts with 160 service providers are being reviewed. The miner says it needs to right-size its operations as it curbs production to match South Africa's constrained capacity to transport minerals by railway to port. Output for the 2024 to 2026 period has been set at between 35 and 37 metric tons. This will allow Kumba to draw down on stockpiles and reduce costs, which it believes will ensure that the business remains competitive in the long term. Kumba's restructuring announcement comes alongside the release of the group's annual results. For the year to end December, the company posted a 26% jump in headline earnings per share. That's as firmer iron ore prices and a weaker rand offset the impact of persistent freight rail problems in South Africa. A final dividend of 24.20 Rand has been declared. This takes the total for the year to 46.80 Rand, which reflects an increase of 4% and represents 66% of headline earnings. BHP has logged first half underlying profit of $6.6 billion. This is unchanged from the previous year, but is slightly above what analysts had expected. That's as the global miner benefited from strong iron ore prices. A dividend of 72 US cents has been declared. Looking ahead, BHP has forecast a more balanced global economy as it believes that inflationary impacts are receding, and this will positively impact the industry in 2024. Super Group says its interim results will show the group's resilience in the face of tough trading conditions. The logistics firm has been impacted by macroeconomic challenges and infrastructure failures in several markets during its half year, but it managed to raise revenue by 12%. This, however, didn't filter down to the bottom line, with headline earnings per share expected to be 16% lower. The firm will open its books next week, Tuesday. WBHO is expecting a profit bump. The construction firm says half-year headline earnings per share from continuing operations could be as much as 15% higher. That's thanks to increased activity across all divisions over the 6-month period. More detail will be available when the firm publishes its interim results on the 5th of March. Vukile has raised 1 billion rand via an accelerated book build. The Real Estate Investment Trust says the equity raise will help it capitalize on growth opportunities. CEO Lawrence Rapp has stated that the group is looking at an attractive pipeline of financially accretive, strategically aligned direct property acquisition opportunities in both South Africa and Spain. But in the short term, the proceeds will be used to temporarily reduce debt in anticipation of the closing of potential acquisitions. And PwC has penciled in an increase in personal income tax, or in the VAT rate, by the National Treasury to raise the additional 15 billion rand in revenues that Finance Minister Enoch Godongwana announced he would need during the medium-term budget policy statement. Godongwana will present the 2024 national budget tomorrow, which is said to be one of the toughest budgets in years, as it takes place against a backdrop of economic recovery efforts and possible fiscal slippage. Further afield, Barclays has laid out a 3-year plan to revive its flagging share price, including axing costs, returning £10 billion to shareholders and investing in high-returning UK retail bank. Let's take a look at this package report for more.
Barclays is on a mission to revive its struggling share price. The bank laid out major plans, including a cost-cut target of more than $2 billion. It also said it would return $12.6 billion to shareholders and invest in its high-return UK retail bank. Barclays did not disclose how it would achieve both the cuts and a modest de-risking of its investment banking business. The strategy update came as it reported a 6% fall in annual profit to $8.3 billion. That was in line with analyst forecasts as a higher charge for potential bad loans weighed. Barclays said it shed 5,000 jobs last year, with much of the cuts falling across back-office roles. It further said it would review the future of its payments business. The announcement was Barclays' first strategy update in almost a decade. It also marks a key moment for Chief Executive C.S. Venkatakrishnan. He's eager to improve returns after a period of management turmoil and underwhelming results.
And EU foreign ministers have given final approval to a naval mission to protect international shipping in the Red Sea area. Here's our reporter, Darling Lachela, standing by with more of the detail.
That's right, Zinati. European warships and airborne early warning systems are being sent to the Red Sea in response to attacks on international shipping. And joining me with greater insight is DW correspondent Ekrem Ikechi. Thanks for joining us today. Now, Ekrem, let's get straight into it. What's the latest on that front?
Thanks for having me. European Union foreign ministers have given the final approval to a naval mission to protect international shipping in the Red Sea area. The EU-led mission, called Aspides, will involve sending 3 European warships and airborne early warning systems to the Red Sea, the Gulf of Aden and surrounding waters. Since October 2023, numerous Houthi attacks have targeted vessels in the Red Sea and the Gulf of Aden region. Such attacks jeopardize the lives of civilians on merchant and commercial vessels and constitute a breach of the right of transit passage in straits that are used for international navigation. EU High Representative for Foreign Affairs and Security Policy, Josep Borrell, said the Operation Aspides will play a key role in safeguarding commercial and security interests for the sake of the EU and the wider international community.
And what led to the creation of the mission?
Well, the mission came as a response to increased attacks by Yemen's Houthis, who have been launching missile and drone attacks in the vital shipping corridor. The Iran-backed Houthis stepped up attacks on vessels in the region after Israel's war in Gaza against Hamas, which is designated as a terrorist organization by the EU, the US and several other governments. The most recent attack took place on Monday and involved the Iranian-backed group targeting a Belize-flagged, United Kingdom-registered cargo vessel. The crew managed to abandon ship and the Houthis said the vessel was at risk of sinking.
Surely this all comes at a price, Ekrem. Now, what is the cost of those attacks to the global economy?
The attacks have indeed disrupted global shipping and have forced shipping companies to opt for longer, costlier detours around Southern Africa. Last week, EU Economy Commissioner Paolo Gentiloni said as shipping through the Red Sea has been rerouted, delivery times for shipments between Asia and the EU have increased by 10 to 15 days, and the costs of these shipments have gone up by around 400%. The German frigate Hessen, which has around 240 personnel on board, is also planned for the mission and set sail for the region over 10 days ago. Earlier this month, Italy's defense minister Guido Crosetto said if this situation continued, it could lead to marginalization of ports on the Mediterranean Sea.
Let's leave it there. Thanks so much for joining us today. That was Ekrem Ikechi joining us from Berlin.